Hello and welcome. I'm Sarah, joined by my co-host Mike. We're here to guide you through the exciting world of investing. We're thrilled to kick off Financial Fitness Mastering the Numbers. This series is designed to help you become a confident and informed investor. To be a smart investor, you must know what you own, and that starts with understanding financial statements. These documents are the backbone of any investment decision.
Over the next 3 episodes, we'll break down the income statement, balance sheet, and cash flow statement. Each of these plays a crucial role in painting a complete picture of a company's financial health. Think of these as your map for navigating the world of investing. Just like a map guides you on a journey, these statements guide you in making informed investment choices. And if you are new to financial statements, don't worry, we will break it down into simple, easy to understand concepts for you.
Today, we're starting with the income statement, also called the profit and loss statement, or P&L. This document is essential for understanding a company's profitability. It tells you if a company made or lost money over a period. By analyzing this, you can gauge the company's performance and make better investment decisions.
We'll use a fun example. Choco Bite Limited Company, a gourmet chocolate bar company. This will make it easier to understand how an income statement works in a real-world scenario. By following Choco Bite's finances for a year, you'll see how an income statement is built step by step. This hands-on approach will demystify the process for you.
So grab a notepad and maybe a piece of chocolate, and let's get started. Taking notes will help you retain the information better.
You can do this. Remember, every expert was once a beginner. With dedication and the right guidance, you'll master this.
Let's dive in and make sense of the numbers together. Understanding these concepts will empower you to make smarter investment choices.
Ready? Let's go! We're excited to embark on this journey with you.
Here we go. Your first step to smart investing. Let's make this journey both educational and enjoyable. Let's get right into it. Mike, what exactly is an income statement, and why should anyone running or investing in a business care about it?
Think of the income statement as your company's financial report card. It's a summary that shows how well a business performed financially over a specific period, usually a quarter or a year. Just like a school report card tells you how a student did in their classes, the income statement tells you how a company did in making money and managing costs. The income statement starts by listing all the money the company brought in from its main business activities. This is called revenue or sales. Then, it subtracts all the costs directly tied to making those sales, like materials and labor, as well as other expenses such as rent, utilities, and marketing. After all those costs and expenses are taken out, what's left is the bottom line, the net profit or loss. This number tells you if the company actually made money or lost money during that period.
Why is this so important for investors and business owners alike? What makes the income statement such a critical document?
Because stock prices alone don't tell the whole story. The income statement gives you a clear, detailed look at whether a company is truly healthy and profitable. It shows if the business is growing, struggling, or just breaking even. It's your tool to look under the hood and see if the business is actually making money, or if there are warning signs you should pay attention to. It helps you spot trends, like rising costs or shrinking profits, before they become big problems.
So, as an investor, you're not just buying a stock, you're buying a piece of the business itself. You want to know if it's making money, growing, and managing its expenses wisely.
Exactly. A company that consistently earns a profit and grows its revenue is usually a stronger, safer investment. The income statement helps you spot those winners.
The income statement is your first and best tool for checking a company's financial health and performance. It's the foundation for smart investing and business decisions.
Let's see how it works in practice with Choco Bite and break down what these numbers really mean. Revenue is the total money a company brings in from selling its products or services. before any expenses are taken out. For Chocobite Limited Company, that means every dollar earned from selling their delicious chocolate bars is counted as revenue. It doesn't matter if the money is used to pay bills or buy more ingredients later. If it comes in from sales, it's revenue. Let's break it down with an example. Imagine Chocobite sold 1 million chocolate bars, and each bar was priced at $2. That means their total revenue for the period would be $2 million. It's a simple calculation. Number of bars sold times the price per bar. This is the first and most important number you'll see on their income statement, and it's often called the top line because it appears right at the top of the report. Every income statement starts with revenue, the top line. This number sets the stage for everything else that follows in the financial report. It's the foundation for understanding how well the business is performing in terms of sales.
But what if revenue drops? For example, if Chocobite's revenue fell from $2.5 million last year to $2 million this year, that could be a red flag for the business. However, it's important not to jump to conclusions. Not by itself. You need context. Is revenue growing year over year? Or is this just a temporary dip? That sounds great. But is a big revenue number always good news? Not necessarily. Sometimes, a company can have high revenue but still struggle if their costs are too high or if they're not collecting payments from customers on time. So, it's important to look beyond just the top line. So, revenue is just the starting point for understanding a company's financial health. Exactly. Trends matter more than the number alone. You want to see steady growth over time, not just a one-time spike. Now, let's move down the income statement to the next key section. Costs. Right. After revenue, it's time to see what expenses come next and how they affect the company's bottom line.
Let's keep exploring how Chocobite's finances work, step by step. Let's see what's next for Chocobite's financial journey.
Chocobite brought in $2 million, but they don't keep it all.
Next is cost of goods sold, or COGS, the direct costs of making the chocolate bars. For Chocobite, that's cocoa, sugar, milk, and factory labor. Let's say COGS is $800,000.
So, $2 million revenue minus $800,000 COGS gives us gross profit $1.2 million.
Gross profit shows how much is left after making the product before other expenses. You can also calculate gross profit margin. $1.2 million divided by $2 million, 60%.
That means for every dollar sold, Chocobite keeps 60 cents before other costs.
Exactly. Now let's look at the next set of expenses.
What about running the business?
Let's break it down.
Beyond making chocolate, Chocobite has other costs, like marketing, salaries, and rent.
These are operating expenses, often called SG&A, selling, general and administrative expenses. Let's say they total $500,000 for the year.
Subtracting that from gross profit leaves us with operating profit, or EBIT, earnings before interest and taxes.
$1.2 million minus $500,000 equals $700,000 EBIT. EBIT shows how profitable the core business is, before debt and taxes.
It's a key number for comparing companies.
Exactly. Now let's tackle interest and taxes.
Almost to the bottom line.
Let's finish strong.
After EBIT, we subtract interest and taxes.
Suppose Chocobite pays $50,000 in interest on a loan. $700,000 EBIT minus $50,000 interest leaves $650,000 earnings before tax, EBT.
Now taxes. Let's use a 20% tax rate.
$650,000 times 20% is $130,000 in taxes. Subtract that, and we're left with $520,000.
That's Chocobite's net profit, the famous bottom line.
This is what's left for the owners or shareholders.
The journey from sales to net profit is clear.
And every line tells a story about the business.
Now, let's see the full picture.
Here's how it all adds up.
Let's lay it out simply.
Here's the summary.
Let's recap Chocobyte's year in a simple table.
Revenue, $2,000 minus. COGS, $800,000. Gross profit, $200,000 minus operating expenses, $500,000. EBIT, $700,000 minus interest, $50,000. EBT, $650,000 minus taxes, $130,000. Net profit, $520,000.
That's a net profit margin of 26%, $520,000 divided by $2 million.
For every dollar sold, Chocobyte keeps 26 cents after all expenses.
That's the power of understanding the income statement. So why does this matter to you as an investor?
The income statement shows if a business is profitable and reveals trends like growing revenue or improving margins.
A positive, growing net profit suggests strong management and a healthy business.
You can also compare Chocobyte's margins to competitors. If Chocobyte's margin is higher, it's likely more efficient or has a stronger brand.
The income statement is your tool for making smart investment decisions.
It helps you spot the best companies for your money.
Look for consistent growth and strong margins.
And always compare across years and with competitors.
That's how you invest with confidence.
Use the numbers to guide your choices.
Let's wrap up with some practical tips. Before we go, here are some practical tips for reading income statements. Focus on the big lines first. Revenue, gross profit, net profit.
Always look at trends over several years, not just one.
Check the margins. Are they stable or improving?
Shrinking margins can be a red flag, even if revenue is growing.
Remember, the income statement is just one piece of the puzzle.
Next time we'll cover the balance sheet and then the cash flow statement.
Using all three gives you the full picture.
You've taken the first step. Keep learning.
Be proud, stay curious, and join us next time on Financial Fitness.
Thanks for watching.
See you soon in part 2 of this series.
Until next time.
Happy investing, and remember to subscribe, like, and share.